Good morning, traders. Happy Saturday. Today is August the 2nd. We wrapped up July last week and now we are into the August trading month, which statistically over the last 30 years has been quote unquote weak. Keep that in mind. Everything that I'm talking about, of course, though, we trade the levels on the chart, not what statistics necessarily say from year to year. Things could be different, and keep in mind, we are in a different trading environment with all the tariff news and things like that going on. Anything could happen, right? Good morning, Gary. Good morning, Andrew. Good to see you. Oh, wow. Busy at work, Andrew? I understand. Definitely. All right, guys, I'm going to kick this off. First thing I always look at is what are possible catalysts in the market for next week. That helps me determine just what days to be expecting some volatility. So, looking at the planned economic calendar for Monday, you can see that basically we have absolutely nothing. I mean, nothing going on, factory orders, but that doesn't typically create a lot of volatility. Daniel, good morning. Sheba, good morning. Good morning. Good morning. On Tuesday at 8:30 before the bell, we have US trade balance coming out. Then at 9:45 PMI, the more important report though at 10 a.m. is ISM Services PMI. That red folder right there, that means chances of higher volatility created there. And that's about it for Tuesday. Wednesday, we have crude oil inventories coming out, some Fed speakers. At 101, the 10-year bond auction, that can move the market, but it doesn't typically be a high impact. Then on Thursday before the market, 8:30 a.m. unemployment claims, preliminary non-farm productivity and unit labor cost. At 10 o'clock, we have wholesale inventories. Fed member Bostic speaking. Then at 10:30, natural gas storage. 101 on Thursday is the 30-year bond auction. And then at 3 o'clock, consumer credit month over month. And on Friday, all we have is a Fed speaker on Friday. So, relative to last week, this week is pretty calm as far as economic data coming out. But as you know, we are in the middle of hot earnings season. So I want to know what names that I pay attention to are reporting, when they're reporting. And you got some pretty good ones reporting this week. After the bell on Monday, Palantir, HIMS, those two stand out right away. Then on Tuesday, if you have a position in Pfizer or Caterpillar, both of those report before the bell on Tuesday. Duke Energy is reporting before the bell on Tuesday. After the close, AMD, this is a big one. It is the first major semiconductor stock that I watch regularly. It's the first one reporting. So that for me will be a big report as I am interested in buying the dip on some semiconductor names this week. So, always know that that could move not just AMD, but the names connected to it like Nvidia or Taiwan Semi, Broadcom, et cetera, et cetera. A Snap is also reporting and Lucid. A lot of people like to trade those as well as Upstart. Then before the market on Wednesday, you have Uber and Shopify, Oscar here, all of them reporting as well as McDonald's and Dave. After the bell on Wednesday, IONQ is reporting. That one should be interesting for the quantum computing names. And then, of course, also App Lovin'. A lot of people like to trade that. Duolingo. DraftKings, if you happen to trade, DraftKings is reporting on Wednesday after the bell. Then Thursday, Eli Lilly, Celsius. I have a equity position in Celsius. I stay in my long-term positions through earnings, but I will be interested in how they do on earnings. Then on Thursday, the trade desk is reporting, SoundHound is reporting. Uh, you can see the names. I like to use earning whispers for just to see the most anticipated earnings release. That's the site that I use on X. So there you have it. That is the potential volatility makers in the market that are planned right now. Now, we are in the middle of all the deadline tariff deadlines and all of that, so you never know when a tweet or something will come out, a press conference will come out that could move the market and could move it sharply, either to the upside or downside. The way that I am comfortable having my capital at risk in this type of environment is that every trade I put on is a set allocation amount that if the trade were to go to zero, I would not wreck my account, nor would I wreck my emotions and confidence. Okay. So let's get started with a top down approach. Anyone trading over the last 2 days knows that we had a pullback in the market, which I mean, honestly, we've been trickling to the upside for so long. It probably felt dramatic to you. But the important thing is go out to the higher time frames and just take a look at what the pullback was, and was it really that dramatic, or did it just feel like it because we're used to basically making new all-time highs each day? So here is this past week's weekly candle. We actually took out the gains over the last 3 weeks on this one weekly candle here, and almost all the way down to the bottom of that fourth week, which is 62.23. Now, I've been saying for weeks now that I would like to see price come back and touch this weekly cloud. We haven't been down here since the end of June, and it's healthy for the market to pull back, touch these key EMA levels. This is a 9 EMA on the weekly. I went ahead and left this weekly demand zone here. We're in the middle of it, and the bottom is 62.23, which is very close to lining up with that weekly EMA cloud at 6,200. Of course, 6,200 is a big round number, psychological value. Notice that you don't even get down to the bull channel until the market were to pull back to about 60.82. Look, in a bullish trend, which we have been in since April when we came down and hit the lower yearly edge inside of demand, where I personally, and I know other traders in the trendy room, were buying the dip down here on major names. Since then, measuring this move from that low in April up to the high, a pullback to the bull channel, which is 60.82 to 58.43, is healthy for a trending market. All right, so I want you to keep that in perspective. In the event that we close this coming week below 62.23, I will remove this zone. It will be invalidated, but on the pullback this week, it indeed held as support like I would expect. Now that it has been tested on further weakness, if we close below there, I will remove that zone and then I will be focused back on this zone down here at the upper yearly edge psychological value of 6,000 for buy the dip opportunities inside of there. Looking at the daily chart on ES, we did have a demand zone here. I took the green box off. I left the bottom of the zone in place. Yesterday, price came down and hit the bottom of this zone, and buyers did step in. I didn't want to leave it on my daily chart because we are so deep into the zone. And I wanted you to focus more on this golden pocket. This is measuring the move. Back in June, we spent a couple of weeks just consolidating in an area, and then we started the trek up to new all time highs. I measured the move where we were consolidating to the all time high to come up with the 50 and 618 fib. There's a few things that I like about this Fibonacci level to potentially look for dip buys. Number one, it's a 50 and 618, and I like to buy the dip there. Number two, the bottom of this daily cloud, which, if we go all the way back, probably to April, price has, even on dips down to the bottom of the EMA cloud, price has held the bottom of the cloud as support. Since we got up into the cloud in April, got above it for since April to through July, the bottom of the cloud has been an area of support. So if I zoom in to that golden pocket there, you will see that the bottom of the cloud is inside of this golden pocket that I like to buy the dip at, right? So this is the area on the daily chart that I personally am watching. Basically 62.13, 62.15 to 61.53. Another thing I like about this is we are below the 21-day moving average and the 50-day moving average, which is very popular for traders to use as support, is inside of this zone and towards the bottom of the zone. So this zone has a 60-point risk because for me, if I am getting into a swing trade using this zone, the bottom of the zone is my stop on a daily candle close. Now, as far as demand goes, I know this looks like an inside and up, but it is not on the daily chart. The zone below of demand is 60.78 to 59.59, and the upper yearly edge is inside here right at 6,000. All right. So that is the daily chart. Now let's look at the 4-hour chart. It's not going to be much different than the daily chart. 62.41, I left that level on the chart. It was the bottom of a demand zone. It held like it was supposed to. If we get further weakness, the next zone on the 4-hour chart is 62.23 by 61.83. And then below there, 61.52 by 6100. Those are the next two areas of support below. As far as resistance or supply, right here we created supply on the weakness over the last 2 days, trading days. That supply zone and a target to the upside for this week is 64.30 by the all-time high of 64.68. That would be my target zone. You do have obviously going to have some areas of resistance above. So if I run the fibs just from the all-time high to the current swing low, that was created yesterday. The first area of resistance is going to be 62.93 to 63.26. Then above there, 63.54 to 63.81. And of course, right up in here would be my target. So those are areas that if you are looking for an opportunity to go short before price gets to supply, these are zones that you can trade to the downside and to my downside target. If next week is going to be weak and we're going to see further downside action, these are zones that you can load to the downside and trade based off of them. A stop would be a candle close above the top of each of these zones, or wait for the supply zone and take the opportunity to go short there. Now let's look at the Nasdaq. On a weekly time frame, I have the same Fibonacci levels measured from the low in April to the all-time high. The Nasdaq came down into this inside and up candle formation at 22,860. It held so far as support. Notice the 9 EMA on this cloud is lining up with the bottom of this zone. If we see further weakness into next week, I will be watching 22,582, a key important level here where I would expect some buyers to be showing up, both from a Fibonacci perspective, a uh, EMA perspective, and a demand perspective. All right. All right. On the daily chart, daily demand right here. I did the same thing as ES. I measured that move from consolidation at the end of June to the all-time high. I found the golden pocket here. It happens to line up with demand on the daily chart, and the bottom of that golden pocket lines up with the daily 50 moving average. That is a zone that I will be looking at trading off of. If I'm not trading QQQ, names that are on my watch list, such as Nvidia or Oracle or Microsoft, Palantir on a after earnings, I would be trading it. Um, in here, those are names that I want to look where are they at according to my trade plan to go long from, because price on the Nasdaq would be in this demand zone and near this golden pocket. All right. No supply above because we do not have an inside and down candle, but on the 4 hour, that supply is up here at 23,800 by the all-time high 845. This is not technically an inside and down, but it is definitely an area of resistance at 23,317. The zone below on this 4 hour chart that matches up with that daily zone that I will be watching is 660 by 388. If I draw Fibonacci's and you're looking for a potential area to short next week, I want to give you those zones for you to trade off of if you desire. Keep in mind, from a bigger time frame perspective, we are still in a bull trend. Nothing has changed. We have had 2 days of pullback, and that is really all that has changed. But if you are looking for a short setup, your zone on the NASDAQ to potentially go short would be 23,027 by 23,183. The 4 hour EMA cloud is lining up at the top of that zone. Above there, the next zone would be 23,117 by 20, or sorry, 23,317 by 436. That is the bearish golden pocket of the last 2 days, the move to the downside. All right. I'll take a quick look at the Dow and just see where the Dow is at in relationship to supply and demand. Demand on the Dow 42,262 by 41,236. The bull channel is here at 43,281 by 42,025. All right. On the daily chart for the Dow, your demand zone is at 43,292 by 42,896, and supply at 44,758 by 45,312. On the 4-hour chart, demand at 43,418 by 43,095. Yet the first area of supply is right here. This was created yesterday, 44,242. And then the next area of supply, 672 by 909. So there's a quick look at the Dow. Now let's talk about the names that I want to focus on. Give me one second. Believe it or not, my sticky note dropped on the floor. Sorry about that. Okay, that helps. All right, some names that I am going to focus on next week are these. First off, if I am noticing signs of some sector rotation, meaning big money is leaving the more risk on uh, names such as semiconductors and tech, and going into the more defensive names as in utilities or consumer staples, then I want to have alerts set for Walmart and Altria. Those two in the consumer staples names are performing the best, um, as far as names that I watch. Okay. Now, Walmart is in and has been testing this weekly supply zone since May. I mean, it is just stuck right here, one way or the other. It is either going to push up higher into that supply zone. You can also see it on the daily chart, or price is going to dip back down to this demand zone. So, where do I want to look to get long on Walmart? Right down here at this 618. So, measuring the down move from the high at 105.30 down to the low. Price got above this 618 level and it's been stuck here at the 764. There is an 85% probability that we're going to come up to the 887. If the market goes more risk off during August and September and money starts flowing into these more defensive type names, then that I believe will be the catalyst that can push Walmart up to 102.42 by 105.30. So a pullback to this 618 here, where I also have demand, is where I'm going to set my alert. And then if the market is showing me that we could be in for a more risk off environment, I will take a trade on Walmart down there. And of course, my first target would be that 764 that price has been stuck at, which is right at 99 to $100. Then my next target, 102 by 105.30. All right. As far as a stop goes, see this beautiful rounding bottom here? I'm going to use the low of this rounding bottom. So 94.43 would would be my stop. Give me one second. All right, sorry. Had to clear my throat. All right, so that is an idea if I see signs of sector rotation next week. I'm not going to have this as a focus, rather just an alert to see, because I still believe that the last 2 days were simply a healthy pullback and needed. And until that thesis changes, I'm going to focus more on the risk on type of names. But in the meantime, I do want to be aware. So let me talk about a couple of utilities names. Utilities have actually, so typically they are more defensive, but they have been screaming to the upside for some time now. So on Southern, it is one of the best performing names in the utility sector. Your demand zone's all the way down here at 90 by 87. Um, that would be a pretty significant pullback, but not unreasonable looking at a weekly average trading range, right? You average trading range is about $3.5, and this would be about a $5 pullback. I don't think we pull back to that weekly zone this week, but if I look at on the daily chart, here's your daily 21. Here is a demand zone. It's actually two zones added together. In this zone, we have both the 21 and the 50, the daily cloud, which is support until proven otherwise. The bottom of that cloud is right here where we created that inside and up. So I like this zone for a pullback buy on Southern. I would scale into the zone because the zone has been tested and it was tested 2 days ago or on Thursday of last week. So my first buy comes in at the top half of this zone, 93.53 to 92.38. And then I would look to add to the position towards the bottom of this zone. My stop would be a daily candle close below 90.38. As far as targets to the upside, I have 95.55 by 96.44. In the event that we take out the all time high, I would simply run Fibonacci extensions to find further upside targets just like this. And then I would be trimming or moving stops up as we hit these levels up in here. Now, if I'm targeting all the way to the top of this extension, that is 102.50, and Southern has a monthly ATR of about $6.50. If I look from there to there, I need to buy more than 1 month to expiration, right? So what my plan is to, on a pullback into this zone, is to buy the September monthly expirations, the $90 calls. Why $90 whenever I'm looking to get in somewhere around 93.5 to 92.5? Well, because my ad comes down into this lower half of the zone, and that is where the at the money strike would be. And I really like to trade at the money when possible. So that's why I am choosing to trade the $90 calls on Southern. My stop would be a daily candle close below 90.38, and then I'm trimming at the levels above that you see. All right, so that is a plan for Southern, the September monthly $90 calls. Uh, Next up, you can take a look at Duke, but remember, Duke has earnings this week. I don't typically trade straight up calls or puts through earnings, but Duke is on fire as well. I would watch the earnings report on a pullback to 119 and a half by 117.45. That would be a buy the dip if you happen to catch an earnings trade down here. You can always trade Duke equity on a pullback like this and just buy equity, even if it's after market. Okay. After the market close, you can buy equity down here. And that's what my plan is. I do have some Duke equity, and just to play a potential uh, trade some equity on earnings, this is the zone that I'm going to pay attention to on that earnings report because it's got room to run, especially if we can break out above this area of 123 to 125 up here. All right. Next up for me, the home builder sector has shown some recent strength, and that got my attention to DR Horton. On a daily chart, I have several things that I like about this zone at 142.84 by 138.72. The first thing I like is that on the chart, you see these different colored lines. These are trendy edges. They represent playing fields of support and resistance or supply and demand. Well, when price is above them, they're support. And we have a yearly, monthly, and weekly edge inside of this demand zone right here. So, my idea for DR Horton is this. I want to buy the dip on into this demand zone. I would be choosing the August 15th 140 calls. The risk on the trade is $4, the width of this zone, or $4.12. All right. My reward is this upper weekly edge up here near 150. That is my reward because that would be my first target. Then above there, I'm targeting 154.19. And finally, the supply zone at 157 by 163.13. A stop would be a daily candle close below 138.72. Inside that zone, you also have these key moving averages. And if you look really closely, the 21 is trying to cross above the 200. That is bullish. All right. If that 21 can get back above the 200, because ideally we'd like to see stacked EMAs. So this is the first step for DR Horton to get back into the bullish territory from a high time frame. This is also this yearly edge is a lower yearly edge, which when trading long term, these are buy the dip opportunities. So that's my plan, though obviously not long term, as I'm choosing 2 weeks to expiration. All right. So DR Horton is a plan. Next up, Nvidia. I want to share my setup for Nvidia this week. Nvidia pulled back nicely. It actually had a gap down here. All right. 170.78 is my buy zone. That is from that gap up move where Nvidia was up, 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 new all time high. We gapped down, barely touched the top of that zone. The daily 21 is still sitting down here. A lot of traders use that as a magnet. That's 169.55. Okay, in at demand at the daily 21, I'm interested in buying this dip on Nvidia. Now, notice this zone is a tested zone because the zone was created here on this inside and gap up candle. This inside and up was simply a test of this previously created demand zone. For that reason, I will be scaling in to NVIDIA calls, starting the position up here near 170.78 and then adding to the position down here at 165.73. A stop would be a daily candle close below 162.02. Now, I am going to look at the August 15th. And remember, I like to trade at the money. So either buy in the 170s or the 165 calls. The August 15th are standing out to me. Tons of open interest, tons of volume on these 170 calls. Now, keep in mind, once price gets down there, these will be cheaper than what they're showing right there. Or if you like the 4-hour chart more, which it has a little less risk here, but it is at least a 1-for-1 as far as where I would trim on this 4-hour chart. Notice that we are below the 4-hour cloud. That's why I'm not just looking to buy the dip right here on the bell on Monday. I want to see price come into that zone at 169.13, which is going to line up close to that daily 21. So if I trade off of this 4-hour chart, I would have about a $5, four and a half, $5 risk. And then my initial reward would be a 1-for-1, so about $5. Then above there, 178.47 and target 181.87 to 185.43. A stop is a 4-hour, in this case, candle close below 164.58. And again, choosing the 170 calls dated for August the 15th. All right. So that's just this trade, honestly, I would only plan to be in for a few days because of the weakness below the cloud. I would trim here and then have a break even stop on the remainder of the position. And that would be a hard break even stop on the remainder of the position. So I would just be playing a bounce basically back up to this 4-hour cloud. And if the last 2 days were nothing but a temper tantrum in the market, then and we get up here to my next trim, hey, great. I will be in great profits and I will trim. And then on the runner, I will target this zone here. All right. So that's my plan for Nvidia. Palantir. Now, I am not going to get into straight up calls on Palantir before earnings because the implied volatility will dissipate once earnings report comes out. And I don't know if you know this, but that kills the option premium price, even if price is going up. So, for that reason, because I trade straight up calls and puts, I won't be trading this before earnings. But what I want to show you the daily demand zone that is 100% a fresh zone. 142.72 by 137.39. You got the daily 50 in here and you got the bottom of the cloud. I will be a buyer in this zone, okay, on Palantir. So, as morbid as it sounds, I'm hoping that the earnings report drives price down into this zone where I can then look, probably not the day after the report, but I will let that day play out and just watch price action in the zone. I'm talking hypothetical here. If price comes down here, price could shoot up and we're skyrocket into new all-time highs. But hypothetically, I will watch price in this zone that day after earnings. And if we start making higher lows on a 2-hour or a 1-hour chart, then I will possibly go ahead and take the trade. As far as targets go to the upside, I would need to measure the fibs, right? Because let's say price pulls down to the 50. Okay. I would measure the fibs, and my first trim's going to come at the top of the bear channel, and then my next trim's going to come at that 618. Now, for right now, these are hypothetical trims because I don't know how far price is going to drop. I will run the fibs then to get the 38.2 and the 618 for my trims on the way back up to the supply zone up here. But this is my trade plan on Palantir. I will not be entering this trade though before earnings. It will be after. Okay. All right. Then another name that I just have my eye on. I'm not necessarily looking to get into an oil name just yet, But CVX, I am an equity holder of this name. FYI for transparency. CVX has been very, very, very choppy in here. We're in a daily squeeze. Um, as far as the 4-hour chart goes, we're below that 4-hour cloud. So I want to focus on buying the dip. My dip zone is here. It has been tested, but I want to watch CVX Chevron once if it gets below this key psychological value of 150. If it gets to 150, holds it as support, then I believe we could see some strength in oil, and I would be playing it back up to 156, 160, and then 164 by 171. So not necessarily a plan that I'm going to get into. I just wanted you to know that I'm watching it. I'm watching it because we got that EMA cross right here, and the 50 crossing back above the 200 would be very bullish for Chevron. So it's on my radar for sure near this psychological 150 value. So just wanted to mention that. And then, as far as another area of the market that has shown on and off strength, and that would be the OIH or oil producers. And Baker Hughes is one of the best as far as bullish. Now, look at where Baker Hughes has pulled back to. You know that I love to trade these golden pockets, and especially after a big move up like this. Well, what I especially like about this golden pocket is I have two trendy edges here. I am will be inside of the trendy cloud here. So this area has a very low risk to take a trade off of. The risk is about 80 cents. My reward, if I get the trade, my first target, the reward is $2. So that's a good risk to reward in what could be a really quick trade. So I am going to watch Baker Hughes. I'll go ahead and put an alert, and that way I know when this alert goes off. Go to Baker Hughes and look at this golden pocket here. Now, if this golden pocket gets flushed below, we have an 85% probability of coming down into the daily 200, the bottom of this daily cloud, this 887 Fibonacci level. And below there is where I would definitely be taking a trade on BKR. 140 or sorry, 4021 by 3738. I would give myself plenty of time to expiration off of this uh, off of this zone here from this nice gap up. All right? So that's an idea also on BKR. So basically, that wraps it up. If you're in the trendy room, I will put all of these charts with the notes of the trade plan in the notes section in the room, as I always do, as well as a link to this video so you can rewatch it and hear what my plans are for each one of these trades. And if you like the plan and you want to put your capital at risk, then by all means, have at it. I will be pretty much focusing on day trading for the most part on Monday. I don't, after a big 500, almost 500 points down in the NASDAQ, we closed near the lows, right? Not exactly at low of day, but we definitely closed near the lows. Sometimes, typically, I don't know, whatever you want to say, but we could see some follow through to that downside action on Monday. Now, don't get me wrong. I yeah, I know I talked all about buying the dip, but that's because we're in a bullish trend on the bigger time frames. I will, I absolutely 100% will trade to the downside, but I do that using the PMZ and using the PMZ and day trading it, not swing trading it. I'm not saying you can't, but I just don't. So, for instance, I had a trade here from this point right here with that trendy turn signal. We also had a Momo reversal arrow here. I shorted SPX right here at this zone after making lower highs and getting this other form of confirmation and shorted it all the way back down. I did not catch this low. I got out right, I said it, yeah, I got out right about here. So, big profits to the downside. But I like to, if the market is bullish on the higher time frames, I like to uh, go short, but on day trading type trades. All right. All right, let me just read in the chat and make sure that I'm not missing anything. Thanks, guys, of all of you for being here. Make sure you hit the like button. It helps me with the algorithm in YouTube. I'm a fairly new channel. I just started this channel 2 months ago, and I really enjoy providing content. So if you would be so kind as to hit the like button. It takes like 2 seconds, and that just helps me out. So let me see here. Andrew, really hard to trade during the day now. Lost almost 2K this year, but make some money too. So a little less than break even. Andrew, here's what I think about that. So my P&L is green on the year, but really I do not base my trading and how I'm doing on my P&L. I base it on, am I remaining disciplined and consistent and following my plans? The trades that I don't stay disciplined on, those are the ones that bother me. So, you know, trading is a marathon, guys. It's not a sprint. And if you treat it as such and just work on becoming more and more consistent and disciplined, the profits, I believe, will come. All right. Joseph, good morning. JK. Now I see. Uh, Good morning. I recognize you from the trendy room. WK, hi Melissa, how are you doing? I am interested into only trading NQ futures daily. I've watched all your videos, checked on simpler trading website. I'm unable to identify one full set of education to build the same approach you've been showing in your videos. Possible, please, to guide me with specific links. I cannot, unfortunately, use TOS due to my location. I use Sierra chart. Are the indicators adaptable? So our indicators will work on TradingView, WK. I'm not sure if you can get TradingView, but I believe you should be able to. And the indicators work on TradingView. As far as links specifically to day trading, I would say watch my videos on trading the PMZ, right? That is my go to. And as far as the NASDAQ, PMZ, and day trades go, this PMZ worked perfectly. On Friday, price below the PMZ, you're going short. And it was a banger of a trade to the downside. If price had been above the PMZ, I'd be going long, right? So, and also WK, click the link and join us in the trendy room. You can get a 30-day trial for only $7 and hang out with Trendy John and I in the trendy room and just watch how beautifully the PMZ works more times than it doesn't. CC, good morning. Good morning. Mignon, good morning. Bob. Anna Marie, thank you for answering that question for WK. Y'all are the best, I'm telling you. Jason, thank you. Sheba, my sister from another mister, thank you for asking for people to hit the like button. I appreciate it. Uh, Darren, you slept in today. It's all good. You can always rewatch it on the link, right? Shoshana, if you entered the golden pocket and it pushed down, would you exit the golden pocket trade? I sure would, Shoshana. So my stop would be a candle close below that 618. Yep, absolutely. Risk management is so important, and my plan is always a stop above or below the zone that I'm getting into. Now, I do commit to candle closes because there is nothing more frustrating than to be wicked out on a liquidity grab wick, right? We've all been there. We've all fallen victim to it. Happens all the time, every single day. So I commit to candle closes, and the way that I'm able to do that, Shoshana, is the amount that I have at risk on any trade is an allocation amount that if it were to go to zero, which very rarely, if ever, does it go to zero, but if it were, it's not going to wreck my account. And that allows me to commit to candle closes and not be wicked out. All right, Bob, good to see you, Bob. Andrew says, thanks for the plan of attack for next week. Please keep sharing on YouTube. I'm still a member of Trendy. Awesome. Absolutely, Andrew. I am here to get here for good. Terry, good morning. Oh, that's my mama. I can tell. Yes, yes. Uh, my trading mama, guys. T this TJ from the room. She is yeah, a member of the Trendy Trading Room, and I call her Mama because she's my trading mama. Awesome. Very good, WK. I look forward to seeing you in the room. You're going to love Trendy John. He's my mentor. He's my trading partner in the room, and he trades futures. I don't want to say every single day, but most every single day. So you're going to love listening to him and what his plan is on trading those futures. So we'll see you in the room on Monday. All right, guys. I am going to close it up here. Thank you all for your support. I truly appreciate you. Have a wonderful weekend. And if you're a member of the Trendy Room, I will see you in the room on Monday. And if you're not, check the description. There's a link that you can sign up for a 30-day trial for $7. And you're not just going to get me in the room trading live, you're going to get my mentor and the developer of the trendy methodology of trading. Trendy John is also in that room every single day trading his money. I trade my money. These are API alerts that come directly to you in milliseconds. So take the trial, spend the $7, hang out with us for 30 days. You're going to fall in love with the room. I'm telling you, we have the absolute best members out there, and we are a trading community encouraging, supporting, and sharing ideas with each other. All right. Until the next video, y'all have an awesome weekend.